I've just discovered this awesome oscillator strat, and I really like it. I'll explain it to you with some real-world examples. Stay around. Hi, this is Tim from TradingStrategyGuides.com. Once again, I apologize for my raspy voice. I've got some sort of creeping crud or something. I don't feel bad. I just sound terrible. Today I'm going to show you a strategy using the awesome oscillator that's new to me. It's showing some very promising results in my testing. I'm not sure why I've never seen this strat since it was in the Trading Strategy Guides blog way back in July. Of course, I've tweaked it to fit my style a little better because that's what I do, and I'll show you all that in just a minute. You know, you guys sort of disappointed me Monday. Over 1,300 people looked at the video and I only got 6 comments, and not a one was about how you tested or are going to test the Heikin-Ashi exit strategy against anything. I know, it takes time and maybe you have to wait for the weekend to do it. I truly get it. I'm not mad or anything, but I don't want to waste time on this training if no one is getting anything from it. I just want to help you guys, okay? Enough said. After we look at the awesome oscillator, we're going to take a look at a new setup on crude oil, which, of course, was one of our open trades earlier this week. But first, updates on our open trades and setups to watch carefully, and then later on, the trading maxim for today. Let's do this. Remember, click the subscribe button and hit that bell so you don't miss any of these great strategies. Not too many charts to look at today, so let's get on it. I may have gotten a bit too enthusiastic moving the stop up to this 64.38 level on the Kiwi Swiss franc on Monday. I had 49 pips locked in, and of course Tuesday that level got hit right there, and it looks like it might be pushing up some more. In any case, you can see if I turn on the parabolic SAR here that we would still be in this at break even, because I would not move the stop above break even until the PSAR is up in this area up here, and then I would just put the stop on the PSAR dot every day. Let's watch this for a few days and see if we would have gotten any benefit from using the PSAR as our exit indicator on this trade. I showed you this range on the Litecoin against Bitcoin chart early in November. It's attacking the bottom of the range right here today. In fact, it's even pushed through just a little bit. So watch this. It could trigger sometime in the next few days. Remember, these charts move all weekend too. Okay, I'll be talking about our formerly open crude oil trade in just a minute. First, let's talk about the awesome oscillator. The awesome oscillator is a Bill Williams designed indicator. If you've used MT4, I'm sure you've seen his name since he ranks a whole category of indicators in MT4. Bill Williams, an American trader, is the author of books on trading psychology, technical analysis, and chaos theory in trading stocks, commodities, and Forex. He designed many well-known indicators that are popular today in many markets. Today we're looking at his awesome oscillator, or AO for short, which calculates the difference between the 34 period and the 5 period simple moving averages, but it has a small tweak. The simple moving averages are not calculated from the closing price as usual, but rather they're calculated from the midpoint of each candle. The AO is typically used to confirm trends or anticipate reversals. Most trading platforms that I've used include the AO indicator as a built-in option for charting. Let's take a look at TradingView first. As usual, you want to click on Indicators and Built-ins and Awesome Oscillator to put the Awesome Oscillator indicator on your chart. If you click the little star to the left like I've done, it will add the indicator to your favorites list. As you're probably aware, I'm never happy with the defaults on these indicators, so I changed them. You can do that by hovering over the name over here and then clicking on the little gear icon, and you'll get a properties dialog box here that you can make the changes Honestly, I don't exactly remember the original colors for this because I changed them a long time ago. But I changed them to something much brighter. This bright green and this bright red, because my old eyes kind of had trouble distinguishing between the original colors. I also increased the line width down here to 2 pixels on both of them to make it even easier for me to see. Then I click down here on defaults and select Save as Default, and now I don't have to change this when it comes up. So I'm going to spread this out just a little bit. I have my ever-present ATR up here because I use that in this strategy. Here's what we're going to look for to get our entries with the AO. To reduce confusion, I'm going to talk about sell signals first. So for right now, let's look at this situation right here. First thing you want to do is look for a high in the oscillator. Then you want to see a lower high in the oscillator. Immediately after the lower high, you want to see a candle color change right here. In my case, from green to red, indicating a change in direction. That would be your sell signal. So you sell on the close of this candle right here, which I believe is this candle right here. You'll use a stop loss of 1.5 times the ATR up here, and a first target of 1 times the ATR down here. And of course, the opposite for a buy signal. Now, I've marked up a Euro USD daily chart with a few of these signals so you can see them. Remember, you're going to be watching these signals on live charts, so you won't see what's about to happen until it happens, of course. And that was kind of a Captain Obvious statement, wasn't it? So the first high you'll notice on this chart is this one right here. Then a couple of weeks later, this thing pushes on up and makes a higher high, which negates this particular setup. And the same thing happens with these 2 lows here. Then this low happens and gives us a nice buy signal. Just to be clear, this low happened, and then a higher low happened, and then the bar color changed from red to green, and that's our buy signal. Now I put this little yellow line here so you can see exactly where it happened. That's not part of any indicator. So this is the candle, and we would buy on the close of this candle. Now right here you can see that the ATR is 57 pips. So the stop loss is going to be 1.5 times that, or 86 pips down here, and the take profit will be 57 pips up here. Now obviously this thing turned immediately and went down and hit our stop, so this is a loser right here. So let's find the next example. Here we have a low, and here we have a higher low. And then the candle color changes, so that's our next example. Right here the ATR happens to be 63 pips, our stop loss is 95 pips, and our take profit is 63. So this easily pushes right on up and hits our first target. So at that point we'll set our stop to break even, and we'll just follow stops up here and get a piece of this 120 pips right here. And here's an example of a sell signal that I showed you earlier. The AO makes a high right here, makes a lower high right here, then we get the color change, and that candle, we sell on that candle. And again, this easily came down here and hit our target right here, and I would set the stop to break even. It's likely that we would have gotten the second half stopped out at break even right there, depending on how we manage the trade after that. Okay, I know a lot of you use MT4, so I'm going to show you some of these signals on an MT4 chart. As I mentioned earlier, the Awesome Oscillator is pretty much a default signal on every platform that I've ever used, and you can find it right up here under Bill Williams, Awesome Oscillator. Remember I told you that Bill Williams had his own category. Okay, this is a daily dollar-yen chart, and you can see on the Awesome Oscillator right here it makes a low, and right here it makes a higher low, and then we get a candle color change right here. Again, I've drawn this line just so you can track it right up to the actual candle. So we entered right here. Our first target is 88 pips and our stop loss is minus 132. So as you can see, this pulled back a little bit but didn't even hit halfway below our entry and hit our target fairly easily right there. Again, depending on how we manage this trade, if we set the stop to break even, it may have taken us out right here. It's likely I would have moved the stop up some and gotten taken out in here somewhere. But again, when you're doing this live, your perception of what's happening is totally different than the 2020 hindsight we have here. The next example is a nice sell signal. We have the AO make a high here, make a lower high here. We've got our AO bar color change right here. And so the sell signal was right here on the close of this candle. 60 pip first target, because that's what the ATR was at this point. 90 pip stop loss. It pushed down on the very next day and hit the target right here. We probably would have gotten stopped out right here at break even on this one. And lastly, we have the AO make a high here, make a lower high right here with AO bar color change. And so we'll sell right here with a target of 44 pips, a stop loss of 66 pips, and it just pushed right up and stopped us out. So that one would have been a loser. Now interestingly, I didn't mark this, but obviously we had a signal yesterday on this one, and the sell would be here. The ATR is 46, so our stop loss would be about 70 pips up here, and our target would be 46 pips down here. And that one, of course, is left to be seen. And that's it for the awesome oscillator strategy. I will link all the relevant information below this video. Now, let me show you the crude oil trade setup. Okay, this dotted line right here is where the bear flag was on crude oil earlier. I sold this candle on Friday, and of course it closed on Monday back up inside the bear flag, so I took a small loss right there. But you can see that the volume and the volatility have continued to drop on this, so I'm willing to take another go at this one, and I've redrawn this bear flag. So the trade plan is pretty clear here. We're going to sell a daily close below this bear flag. On the breaking candle, to enter a full-size position, we want the volume to reach the volume average right here. If it doesn't quite reach the average but does reach 75% of that average volume, I'll open a half-size position to reduce risk. You can calculate that by taking this volume number here, dividing it by the volume average. You should get 0.75 as a result. If you don't get 0.75, stand aside on the trade. The stop loss will be 1.5 times the ATR. First target will be 1 times the ATR. So again, if this thing breaks down to here, that'll be your entry point just ahead of the close. You'll look at the ATR, you'll multiply that by 1.5, and you will place your stop loss that distance above the entry, and you'll place your first target 1 ATR below the entry right there. If after entering the trade we get a candle close back up inside the bear flag like we did the other day, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of these patterns should be explosive and hit the target fairly quickly. If the momentum goes away, in other words, if the candle closes back inside the consolidation, we want to shut the trade down without taking a full stop if possible. That's how we keep our losses small on these trades. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now, these two rules are the very definition of cutting your losses and letting your winners run. Typically, I would do this with two positions. The first position would have a stop loss and a take profit on it, and that position would close automatically when the first target is hit. The second position will have a stop loss and no take profit on it, and that's the position that will be allowed to run. When the first target is hit, we'll have to move our stop loss up to break even manually on the second position. I will risk about 2% of my account on each trade, and that's the new setup on crude oil. Are you tired of hearing this yet? I'm not trying to tell you what to do. I'm just telling you how I handle these trades. If you want more details about what I do, look below this video for a link to my trade management video. And if you've got a trade management plan that works better for you, use it. Trading is very personal, and things that work for me may not work for you. You have to understand your own mind to find your best strategies for trading. And of course, psychology and knowing your mind is, in my opinion, the most important part of trading. And I use these trading maxims that I share with you as my way of handling my personal psychology. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today it's Tim's trading maxim number 11. Don't practice until you get it right. Practice until you can't get it wrong. Yes, I took music lessons as a kid, and my teachers were always telling me this. I actually had more than one teacher that used to say this. Everybody says practice until you get it right, but don't just get it right one time. Get it right all the time. And do that with your trading. Make sure you understand your platform. Make sure you understand your trading strategies. Keep practicing with it. And of course, getting it right is not always winning, and getting it wrong is not losing. I mentioned yesterday that getting it right is following your rules. Getting it wrong is not following your rules. So I guess you have to start by having rules, right? Remember our crude oil trade plan here. We're going to sell a daily candle close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And please don't miss any of my trading picks. Sign up for the Trading Picks email list. I'll be sending out 3 or 4 trading picks a week, everything from stocks to futures to cryptos to Forex, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or two on each one and maybe some QA or training. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. And don't forget to spend some time backtesting these indicators. You want to be a professional trader, right? That's what it's going to take. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great remainder of your week, and I'll see you next time.